We all know that it is impossible to invest in all the available stocks that we like, even though we try to. And today I would like to talk about two stocks that I've been following for years because I use their products but have never invested in them. Hello everyone, welcome back to the channel. Please consider subscribing and smashing that like button since it really helps the channel out. Also, I have a completely free Discord group chat. Which link for that is down in the description below. Now, I understand the stock market is down 4%, or the S&P 500 is down 4% since the beginning of September. And we all have seen how all these big tech companies are going up and up and up without stopping, and we knew that a pullback was necessary and healthy. The market was due for a pullback. We should love this kind of pullbacks and not panic sell. Apple is down over 8%, Facebook over 6%, and Amazon is even down almost 10% and more. I assume you already know everything that is happening, as everyone has been talking about it online on YouTube since Monday. If you would like me to post a video talking about it, then let me know in the comment section below. But let's start. The first stock I have been watching since 2020, and I have actually included in one of the stocks to buy each month last year, is Intuit stock, ticker symbol INTU. Intuit is simply a financial software company with a bunch of different products that help people with their small businesses, personal finance, accountants, taxes, and all that. As you can see, they currently own TurboTax, QuickBooks, Mint, and Credit Karma, and recently they announced that they will acquire MailChimp, which brings excellent digital marketing tools for their customers and their businesses. I have to say that I used to use TurboTax when my taxes were easy and didn't need an accountant for that, and have to say that I loved it. It is very straightforward and also offers customer service with excellent knowledge that could help you with any question that you might have. I still use Credit Karma and Mint a lot on a weekly basis to check my credit score, my spendings, my income, my credit card offers, which is how I was able to know that I was already pre-approved for an excellent credit card called Chase Sapphire Preferred, which is currently offering 100,000 points for travel, and applied to it and got accepted because of that. Let me know if you would like me to post a video talking about all the credit cards that I currently have and why I have them. Anyways, these two apps, Credit Karma and Mint, are apps I recommend anyone to install and check out, as it helps you organize your finances. Credit Karma also helps you compare auto loans, personal loans, home loans, insurance for your car, and very important things on your daily basis when you want to improve your credit score. What I love about Intuit is that it was actually founded 38 years ago, and they have been innovating a lot every single year to be able to continue seeing a high growth and providing up-to-date services or softwares to customers. Plus, they have continued having such excellent growth year over year. They even have AI or artificial intelligence in their products, and also have an omni-channel commerce which moves their business to cloud software. And the most important thing is their free consumer finance platforms, which are Mint, Credit Karma, and TurboTax. Now, with their MailChimp acquisition, they would be also acquiring a lot of customers, which they could now offer their other products to, as MailChimp has a total of 13 million users and 2.4 million monthly active users. Now, they just released their annual report for the fiscal year ending on July 31st. They reported a revenue growth of about 25% to $9.6 billion. Something I love about this business is their cost of revenue. As you can see, they spent only $69 million with an M to make over $1.6 billion with a B, and spent $1.5 billion to make almost $8 billion. That is certainly impressive and excellent, way better than many big tech companies out there. Also, they have a profit margin of 21%, which I believe is excellent. They have a nice balance sheet as well, with about $3.86 billion in cash and investments, which we can see their cash decreased but still ended up with a total asset of $15.5 billion and total liabilities of only $5.6 billion. Now, under cash flow statement, we can see that yes, they reported $3.2 billion in cash from operating activities, and in here we can see that their investing activities increased massively as they spent over $3 billion in acquisition of businesses, as during the year ended July 31st, Intuit completed its acquisition of Credit Karma for a total purchase price of $7.2 billion. I do understand that the stock is almost at all-time high, and it was at all-time highs back in September 2020 as well when I first talked about it in this channel. The stock is actually trading at $562 per share with a market cap of $153 billion. I'm not buying right now, but I would love to if we see a nice pullback, as it is kind of high for me in my opinion, but it is definitely a stock to check out and follow, as I believe they will be able to continue innovating and being the leaders in the industry with all of their products. Now, the second stock is another stock that not everyone talk about on YouTube, and this is Adobe stock, ticker symbol ADBE. I assume you already know that Adobe is also a software company which also offers a bunch of creative and excellent apps such as Photoshop, Premiere Pro, Illustrator, Lightroom, and more. In my opinion, it is one of the easiest companies to understand, but it is still not that popular on the internet, even though the stock has gone up and up and up non-stop in the long term. If you are a content creator or like to edit photos or anything like that, then you have at least used one of their products. And I have to say that even though I don't use them all, I only use Lightroom for my pictures, I like it a lot. I have a lot of friends as well that do have a bundle of products, including Premiere Pro for video editing and Photoshop and Lightroom, and have never had any kind of problem with it. It is a company that it is constantly innovating as well, which is obviously very, very important in this industry. Something else I like about this company is that they don't only offer popular media editing applications, but have recently expanded into marketing software and cloud collaboration tools. Adobe at the moment is the world's largest software company, and even more as every year they continue innovating and impressing investors with how much it is able to grow and find new markets. The company just reported their Q3 earnings yesterday and reported a nice revenue growth. Their revenue grew 22%, their digital media segment grew 23%, their digital experience segment grew 26% and more. As we can see here, they reported a revenue of $3.9 billion, which we can obviously see that their growth is not as explosive as many other big tech companies, but it's still at 22%, which obviously I think it is still a nice growth for such company. Obviously, their fastest growing segment is their subscription base, which is their main segment, but something I like a lot about this company, just like with Intuit, is their cost of revenue. Just see how they only spent $467 million to make over $3.9 billion. That is a huge gross margin of 88%. 88%, that is huge. And see how even though their revenue increased 22%, their cost of revenue only grew a little over 9%. Now their operating expenses did increase a bit more, but it was 17%, way below their revenue growth, which is obviously an excellent sign, and ended the quarter with a net income of $1.2 billion, which would be a nice profit margin of over 30%. Now their balance sheet is quite nice as well. They have total asset of $26 billion and only $11.7 billion in total liabilities. Yes, they do have $4 billion in debt, but they have twice that in only current assets. So I have to say that they are definitely doing a nice job and know how to run their company very, very well. They know how to control their costs, their cash, and their investments. Something I did see as well is that they are repurchasing their stocks even harder than last year, as they spent double of what they spent last year. Adobe is currently trading at $626 per share with a market cap of $298 billion, and it is currently down about 3% today. Even though the stock has been going up and up lately, it started to drop, and would love to see a nice pullback as well for any of you that would love to start a position in this stock. I would love to know what you guys think about these two companies, and if you invest in any of them. I believe both still have a lot of growth potential as a company, but I would like a pullback before starting any position in them. Still, I have been following these stocks for a year now, and they have been going up and up and up. Hope you enjoyed the video. Please smash the like button and subscribe, since it really helps the channel out with the YouTube algorithm. Thank you, and see you next time.